Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Bitmine Immersion Technologies.
If you find our talks useful, please consider subscribe, like, and comment underneath.
You know, when you look at a stock chart, you usually see, I don't know, a gradual climb, maybe a slow dip.
Right, something that makes sense.
Exactly. But if you were watching this past Friday, and it was Friday the 13th of all days,
Of course it was.
you saw something that looked less like a stock chart and more like a rocket launch, a vertical takeoff.
Yeah, Friday the 13th, you're thinking bad luck, maybe stay inside.
Hmm.
But for anyone holding this stock, it was the complete opposite.
A very lucky day.
A very lucky day. It didn't just tick up a bit, it absolutely surged, the volume was huge, and it seemed to catch most of the retail world completely flat-footed.
It really did. And usually with a pop like that, you can trace it back to a rumor on social media
Yes.
or some crazy tweet from a CEO.
Some meme stock energy.
Right. But this felt different. It felt heavier.
Heavier is a good word for it. It didn't have that flimsy, hype-driven feel. There was real weight behind the buying.
And that's because the heavyweights were doing the buying, the disclosure forms started dropping, and the institutional activity here is, well, it's frankly staggering.
Okay, let's get into that. Because we always talk about following the smart money, right? It's a cliche because it works.
It does.
But this sounds like more than just a hedge fund dipping a toe in. This sounds like a cannonball.
A cannonball is the perfect way to describe it. So the headline grabber here, and you really can't overstate this, is BlackRock.
The BlackRock.
The world's largest asset manager. They don't just accidentally load up on a crypto-adjacent stock. They increase their holdings by 165%.
Whoa, hang on. 165%.
Yep.
That's not a let's see what happens bet. That is a high conviction, we know something kind of move.
It is a massive validation signal. When BlackRock moves that hard, it tells the entire market, we've done our homework and we think this is a winner.
And they weren't the only ones, were they?
Not even close. That's what makes it a real signal. We also saw Ark Invest, Cathie Wood's firm, add another, $4.2 million in exposure?
Okay, so Kathy's in too.
And then you have Murray Asset jumping in as well. It's like everyone rushed for the same door at the same time.
It's a cluster of institutional buying.
We call it cluster buying, yeah. It's when you see these big, unconnected firms all making the same move at the same time. It suggests they're not just looking at this one company.
They're making a bigger bet.
A bet on a whole sector turning around, and out of all the ways they could play that, they picked this specific company.
And that's the part that surprises me. I mean, the name, Bitmine. It sounds like a dozen other companies out there. You just assume, okay, they've got a warehouse full of loud computers somewhere.
Another miner in the herd.
Exactly. Why are the giants piling into this one?
That's the key question, and the answer is that the company is going through, well, a bit of an identity crisis. In a good way.
An identity crisis sounds bad. It sounds like they're lost.
In this case, it means they're evolving. If you just think they're digging for Bitcoin, you're looking in the rearview mirror.
So what's the new model?
They are pivoting away from just mining for themselves and towards something they call digital asset ecosystem services.
Okay, hold on. Digital asset ecosystem services.
That sounds like a whole lot of corporate buzzwords.
It does, I know.
What does that actually mean?
In plain English, it means they're not just using the shovels anymore, they're selling them. Or, more accurately, they're selling the high-tech cooling systems for the shovels.
Ah, okay, the immersion part of the name.
Now you're getting it. I assumed for a while it was just marketing fluff, you know? Like adding AI to your name today.
Or blockchain back in 2017.
Exactly. But it's not. It's their actual technological moat. It's their secret sauce.
So how does it work?
Well, think about most big computers, whether for mining or for AI. They're all air-cooled, right? Just giant, loud fans blowing hot air around. Super inefficient.
I know this pain. My gaming PC sounds like a 747 taking off. My office gets 10 degrees hotter. Right. So now imagine taking that computer and just dunking the whole thing into a tank of specialized liquid.
That sounds like a very expensive mistake. And a fire.
You'd think so, but it's this special fluid, a dielectric fluid. It doesn't conduct electricity, so the electronics are safe, but it's incredible at pulling heat away.
So they're basically pickling their servers.
Kind of, yeah. And because it works so well, you can pack chips closer together and run them faster and harder without them overheating. It's way more energy efficient.
And you were saying this isn't just for their own mining operations.
No, and that is the pivot. They're selling this whole system as a service. They'll design it, supply it, install it for other miners, And this is the big one for high-performance computing centers.
You mean like AI data centers?
Think about the AI boom. Those chips run incredibly hot. They need better cooling. BitMine has basically turned their internal solution into a product they can sell. Intellectual property.
Okay, that makes so much more sense now. That's why BlackRock is interested. It's not just a commodity crypto miner, it's a technology company.
It's a picks and shovels play. But this is where the story gets really, really wild.
Oh, there's more.
When I looked at their January filings, my jaw just about hit the floor. We have to talk about the financial paradox of this company.
I'm ready. What's the paradox?
Okay, so their revenue, annual sales are just $3.31 million.
Wait. 3 million? With an M? 3 million. We were just talking about BlackRock and Ark. 3 million is, that's nothing. That's a rounding error for them.
It's tiny. And their margins are terrible. They're burning cash. Net margins are sitting at negative 65%.
So they sell almost nothing. And on the little they do sell, they lose a ton of money.
For every dollar in, $1.65 goes out.
Then why?
Yeah.
Why is anyone buying this? Why are we even talking about it? This sounds like a disaster.
It's not hype. And this is the wait, what moment? It's all on the balance sheet. They have $3 million in sales, but their assets. As of last October, they had a total crypto and cash holding of $13.4 billion.
I'm sorry, hold on. Did you say billion? With a B?
13.4 billion.
How is that possible? How does a company with 3 million in revenue have $13 billion? Did they find a treasure chest?
It's not cash in a bank account. It's almost all in crypto. They're holding 3.24 million Ethereum tokens.
Wow. Okay, so it's not really a tech company. It's a vault. It's a giant digital wallet that also sells cooling systems on the side.
That's the best way to look at it. It's a holding company play. They're not doing buybacks or dividends. They're taking every single penny they get and plowing it into their Ethereum treasury.
So when you buy a share of the stock, you're buying a tiny piece of that huge pile of ETH?
A piece of the ETH plus a call option on the cooling tech business. And that's why the market is valuing it the way it is. They're ignoring the $3 million in revenue and looking at the $13 billion in assets.
It's like what MicroStrategy did with Bitcoin, but for Ethereum?
It's a very similar playbook. But that brings us to the risk, and it's a big one.
I was going to say, if they're burning cash on operations, how do they pay their bills? You can't pay the power company with ETH tokens.
You're exactly right. That is the biggest red flag. We looked at their current ratio.
Break that down for us. Why does that number matter?
The current ratio just measures your ability to pay your bills for the next year with the cash you have on hand. Anything under 1 is the danger zone.
And theirs is?
0.41.
Oof. So for every dollar they owe in the short term, they only have 41 cents in cash to pay for it.
Exactly. They are asset rich in crypto, but cash poor in, actual dollars. It creates a massive liquidity risk. If they need cash fast, they either have to sell their precious ETH,
which defeats the whole purpose,
or they have to issue more stock and dilute everyone.
It's a high wire act. They're sitting on a mountain of gold, but they're short on lunch money.
Perfect analogy. But, and this is a huge but, the market thinks they can pull it up. BlackRock and Ark, they see this risk and they're still buying.
So why are they so confident?
A lot of it comes down to leadership and the macro picture. Do you know who the chairman of the board is?
I did see the name. It's Tom Lee, right?
Tom Lee?
Tom Lee from Fundstrat, the guy who's always on TV talking up Bitcoin.
The very same. He's the chairman. And that's critical because of what he just said yesterday.
Missed it. What was the call?
He basically called the end of crypto winter. He said he's seeing a huge rebound in Bitcoin and Ethereum support levels, starting now.
Well, of course he would say that. He's the chairman. He's talking his own book.
He is, but he moves markets. People listen. But just connect the dots. If Tom Lee is right and Ethereum prices surge, what happens to BitMine's $13.4 billion treasury?
It explodes. If ETH doubles, their assets double. That $13 billion becomes almost $27 billion.
And since the stock price is just a reflection of those assets, it goes vertical. The stock is a leveraged bet on Ethereum.
So if crypto is hot, the stock is on fire. If crypto is cold,
then they're just a company with a cash flow problem and a lot of very cold servers.
So where does that leave the stock price right now? You said it surged Friday.
We're trading in the $50 range as we speak. But you need context. The 52-week low for this stock was around $2.76.
$2 to 50. That's an incredible run already.
It is, but The 52-week high was $161.
Oh, wow. So even at 50, it's way off its peak. It's just starting to recover.
It's breaking out from the bottom. It's making what we call higher highs. It looks like it's waking up.
So there's still a lot of headroom. What are the analysts saying? Is there a price target?
The consensus is a buy, and the average price target is $90.
90. So from $50 today, that's almost an 80% upside from here.
78.5%, yeah. And that's based on this thesis that crypto winter is over and that treasury value is about to appreciate.
This whole thing feels like a swing trader's dream. You've got volatility, a huge catalyst from Tom Lee, and that institutional buying from BlackRock putting in a floor.
It's definitely a swing trade into Q1 earnings. You're betting their treasury value will be higher. And that maybe, just maybe, they've sold a few more of those cooling tanks.
It's a heck of an elevator pitch. We have a $13 billion crypto bank, the best cooling tech there is, and a famous crypto bull running the company. Oh, and BlackRock just bought in.
When you put it like that, it sounds easy. But we have to circle back to the risks. We have to.
The bear case. The cash flow problem.
It's real. If Tom Lee is wrong and crypto tanks again, that treasury value gets crushed. And with that 0.41 current ratio, they could get into a death spiral.
Having to sell their assets at the bottom just to keep the lights on?
Exactly. So you have to believe in the crypto recovery to get into this. This is not a set it and forget it stock.
It's not Coca-Cola.
Far from it. This is for someone who can stomach the risk for that high reward.
So final verdict. Where do you land on this? Give me a score.
I'm putting a bullish score of 8 out of 10 on this.
An 8. That's high, given they're losing money on operations.
It is. It's high risk, high reward. But for me, the institutional backing is the tiebreaker. You just don't see BlackRock and Ark make these kinds of concentrated bets unless they think the bottom is in.
They're betting the turnaround is here.
And with Tom Lee steering the narrative, the sentiment has just completely shifted. In this sector, sentiment is everything.
It's a fascinating setup. A tech moat with the cooling systems, plus a massive crypto bank account. It's like two companies bolted together.
And at this moment, both sides of that coin are looking pretty shiny.
Well, there you have it. Bitmine Immersion Technologies. Not just another miner, but a $13 billion asset play disguised as a small-cap tech stock.
Just watch that daily chart closely. It's going to be a bumpy ride.
Definitely. If you find our talks useful, please consider subscribe, like, and comment underneath.